Hello everyone, and welcome back to the fourth lecture on mobile banking and financial innovation. So today we're going to continue with innovation in financial services. So we'll start by looking at crowdfunding, peer-to-peer lending, cloud computing, initial coin offerings, some future trends, and we'll also look at issues of security, and we'll look very briefly at how the property sector is developing. So as you can see from this slide, the traditional ways of actually raising funds is actually quite straightforward, but it's very problematic. So what technology does is, in essence, it gives you choices which did not exist in the past. So in terms of the funding, we have a number of innovations. So the internet, the fintech, and the dawn of digital globalization has brought individuals and groups together through digital networks. These newly established networks and connections are being harnessed in the space of funding and lending. The reasons why these innovations in the funding and lending space have been successful is due to the combination of current economic conditions, changes in regulations, and approaches to risk. In addition to this, individuals and organizations are increasingly willing to accept and trust new frictionless technology. So an example of this would be crowdfunding, where a group of people actually join together to form a crowd and fund a particular venture. So, well, what is crowdfunding? Well, traditional models of bank financing usually use consumers' deposits to offer loans to individuals and organizations. Newer models of lending and funding consider the motivations and interests of investors whose capital is being offered as loans. These need to take funds motivations into considerations when making investments has been driving the force in the innovative funding space. So you have effectively rewards-based crowdfunding or non-equity crowdfunding. So types of crowdfunding where organizations pre-sell a product or service before it has launched. So these rewards-based crowdfunding campaigns often do not guarantee the success of the campaign. Rewards-based crowdfunding is not currently included in the scope of financial regulations, and for this reason there is a lack of security or return of investments for crowdfunders. So what are the examples of reward-based crowdfunding? So in this slide you can see a number of startups, so for example Ingo, Kickstart, and so forth. So if you go to the relevant websites, you can actually find out what they're doing. You also have equity-based crowdfunding. So equity-based crowdfunding functions similarly to reward-based crowdfunding. However, in return for the investments, individuals receive equity in the new organizations. And unlike reward-based crowdfunding, equity-based crowdfunding, because of offering equity to investors, needs to guarantee some form of security and offer a return on investments. This return on investments can either be equity in the organization or share in the revenue. And again, you can see below a number of examples where equity-based crowdfunding takes place. And again, I suggest you actually go visit the websites to find out more details of them. So in this slide, what I have done is summarize the benefits and limitations of crowdfunding. The next one is peer-to-peer lending. So peer-to-peer lending, also referred to debt-based crowdfunding, involves utilizing platforms and technologies that make it possible for peers to lend capital to one another. These new platforms have allowed the creation of innovative marketplaces that connect those who need loans with those who want to offer capital. These networks benefit those who require loans, as they are protected against rigorous applications processes and discriminations that can potentially exist in the traditional space. Different lending platforms use different financial models. Some of these may have minimal or no interest on loans, while others may use a model of forgivable loans that only need to be repaid if the project is successful. Although these models are advantageous for those who require loans, investors are not always protected by regulations. One of these benefits of peer-to-peer lending platform is that they utilize innovative technologies. So again, in this slide you can see examples of peer-to-peer lending, and again you can see Funding Circle, Prodigy Finance, Prosper.com, and OctopusChoice.com. So again, you're very welcome to actually go to those websites and check them out in more detail. The other one which you're going to look at is initial coin offering, ICO. So it's a new form of fundraising that has gained popularity recently. Is that of initial coin offerings, ICOs. So ICOs refer to a form of crowdfunding whereby cryptocurrency tokens are sold to early investors, often ignoring the fundamental value of the business offering. The value of ICOs are heavily impacted by supply and demand factors implicit in the highly speculative crypto market environment. Many investors buy ICO tokens with the sole expectation that they will lead to profits in the future. These ICO tokens have no intrinsic value other than that ascribed by the issuing equity. One unique aspect of ICOs is that when a company lists an ICO, the terms of the token and how it will operate are defined in a white paper that is issued with the coin. So another way to look at risk is that innovation as a form of risk mitigation. So the benefit of increased transparency and the ability for people to know how risk their choices of investments are, the increased availability and use of technology which facilitates more accurate risk assessments, the speculation that regulations will begin to react to these new innovations and as a result increasingly facilitate new platforms and methods of funding and lending, which will strengthen the networks created and encourage more people to partake in the marketplace. So what are some of the trends? Well, according to Ernst & Young, these are the following trends. Okay, partnership between banks and alternative funders will be an increasing occurrence as these participants will allow for an even larger capture of the market. Regulations in the alternative lending space has up until this point been lagging, yet as the regulation and legislation becomes more refined in this space, this could either propel or limit the growth of the space. Up until this point, alternative lenders have focused on the initial phases of capital raising for new businesses, but it is likely that the focus will begin to shift to the support of organizations' longevity and profitability. What are the other trends and directions? Open and increased access to financial services, the potential for blockchain technology to further revolutionize the space, increased readiness from consumers to accept and embrace new technology and methods, the impact of innovative technologies including blockchains, artificial intelligence and machine learning, the deconstruction of the current financial system and unbundling of financial services, technology that allows different services to be received from different providers, okay, increased and continuously growing focus on data. Okay, so what are the moral hazards? So part of the problem has been information asymmetry. So in this slide, it actually highlights some of the moral hazards that may be available, that may exist in crowdfunding. You also have the issue of legacy systems. So legacy systems are essentially systems that go back to the past and which need to be updated. So again, in this particular slide, we have basically various types of legacy systems, in particular two types of legacy systems. We have global national systems and processes and organizational legacy systems. So that means essentially updating the infrastructure. So large organizations can consider employing the following steps when updating their core infrastructure. So define and clarify corporate strategy, understand current IT capabilities, ensure regulatory compliance, define a target operating model, position the organizations for growth. Now let's have a look at mobile devices. So with increase in mobile subscriptions, more consumers are engaging through their mobile phones and making use of digital platforms to connect to people and services. This has profound effect on many industries, including financial services industry. Many industries have redesigned their business models, leveraging mobile platforms to offer new and existing services to new and existing markets. The benefits of the mobile and digital platforms include access to new revenue streams, the potential for faster innovation, relatively low operating costs, and rapid scalability. The other one is cloud computing. So the development of cloud computing has enabled many other technologies, including AI and data analytics, as these technologies rely on the ability to process large amounts of data. And the cloud provides a space to store these large quantities of data and information. Many mobile applications rely on the cloud for intelligence, information, and connectivity. Okay, so there are several benefits in cloud computing on the banking industry, including cost reduction, greater flexibility, scalability, agility and efficiency, improved consumer services, and continuity. The other one is cybersecurity. So the merging of financial services and new technologies has a positive impact on the financial industry, providing better, faster and cheaper services and solutions to existing and new markets, and facilitating financial inclusion and economic growth. Large financial services organizations are aware of the opportunities and benefits of partnering with fintech organizations and startups to address the challenges they face in terms of legacy systems and infrastructure. However, a majority of these organizations fear the cybersecurity risk associated with these partnerships. There are several key trends impacting cybersecurity and financial services, including an increase in the number of organizations developing digital financial services, the growing incongruity between regulation and emerging technology, the potential for new technologies such as machine learning to facilitate cybersecurity solutions and challenges, an increase in populations with a lack of knowledge around cyber risk because of the previously unbanked having access to financial services, the growing number of interfaces for data crossing between traditional financial services providers and fintechs, which results in room for greater susceptibility to cyber attacks. You also have issues with anti-money laundering. So anti-money laundering refers to regulations, rules and procedures designed and implemented to prevent illegal operations. So it's essentially what it involves is know your customer KYC, so due diligence process. Is the first step to prevent fraud and money laundering. The process involves gathering basic identity information to determine the potential consumer risk in terms of identity theft, terrorism and money laundering. So technologies such as machine learning, big data, AI and APLs or application programming interfaces provide solutions to financial organizations, including faster implementation time, cost effectiveness, a seamless integration, reduced error rates, improved efficiency, a smoother onboard exercise. Okay, now let's go into the real estate landscape. So real estate is a huge industry worldwide. So the market has traditionally been slow to adapt modern technology and adapt to changes in the market. There are various types of property that constitute the housing market. So some types of property include residential property, commercial property, agricultural property. In total, it is worth around 25.8 trillion globally. In addition to the above types of properties, the property market also has many smaller specific markets with the broader property markets. So these markets are related to the function of services that they fulfill that include sale, retail, development and management. That takes us to PropTech, similar to FinTech. So PropTech is a broad term used to refer to a new generation of business and business models based on new emerging technologies that are disrupting the traditional property markets and business models. Although there are many aspects of PropTech that are new and innovative, some are not new developments. For example, advertising property online. The overlap of these two areas lies in how value is exchanged and transferred. In addition to this, it is related to how information is shared and increasingly how transparently this is being done. The internet and .com boom led to innovations in the property market, which eventually developed into what is now known as PropTech. So in terms of the evolution, you have PropTech 1, PropTech 2 and PropTech 3. Innovations and disruptions in all spheres, including that of the property and real estate, are driven by the following three drivers of change: technological advance, demographics and globalization. Okay, in terms of the PropTechs, we have the horizontal section, so information exchange, payments and transactions, managing and control of buildings. Below each one of those headings, you can find additional information on the slide. And then in this, you have the issues that arise with PropTech regulations. And if you go through the slide, you'll have a bit more idea of what's actually going on. You then have the PropTech verticals. So you have the real estate fintech, the sharing economy, and the smart building. Now let's have a look at online estate agents. So the consequences of the increased number of online estate agents platform is the anticipated drop in the number of estate agent jobs that will be necessary and available. Information exchange platform, which currently enhance the offering of estate agents but hold the potential to replace their service offering in the future when combined with fintech platforms that have click-to-purpose capabilities. Two examples of organizations in this space are Purplebricks and Redefine. So again, if you go to the website, you can get additional information on them. Then you have mortgage tech. So mortgage tech companies focus on simplifying and digitizing mortgage applications processes. They do not service or provide loans themselves and can serve only as intermediary. Examples of mortgage tech organizations that facilitate the application process but do not service the loan themselves include the following: Rustify, Blend, and Tussle. Again, you can go to the web pages and find additional details. Let's have a look at digital lending. So digital lending is a subset of mortgage tech and refers to organizations that both facilitate the application process and service the loan. So examples of organizations that offer this service in this space include the following: Better, Sophie, and Lending Home. And again, they have the web pages and you can find details from them. Okay, so and in this particular slide, you can actually look at the investment management of real estate. And again, there are various websites on this slide that you can actually go through. You also have information exchange platforms. So some of those platform organizations that provide information exchange platforms that PropTech space include the following: Rightmove, Zillow, Trulia, and Compass. So again, you can actually find more in-depth details from their websites. You now have the renting and the sharing economy. So the sharing economy, also sometimes referred to as the idea of collaborative consumption, represents the notion that resources have more value when shared. So the sharing economy has grown out of the multi-purpose technology platforms that have increased the connections through digital globalization and decreased the distance between individuals. In addition to this, the sharing economy has increased access to resources such as property of those that may not have had access. So the sharing economy and its associated technology has enabled individuals to utilize shared resources. As a result of the financial crisis, has been a reduction in the cost of rentals. For this reason, many more individuals are willing to do this kind of transactions online and through click to pay. In addition to this, shorter term lease periods are increasingly becoming available. So this may be one of the factors that has increased the adoption of PropTech innovations in the rental space. The rental market has two large factions, namely residential rentals and commercial rentals. So an example would be Airbnb. And again, you can go to the website and find more details. So the platform allows individuals to turn extra space in their homes or entire unused homes into rentable spaces. So the platform facilitates the searching, booking, and paying for accommodation. Airbnb has capitalized on the opportunities represented by the available technology as well as the readiness of the public to embrace these new ways of finding, booking, rating, and paying for short-term rentals. By integrating fintech innovations in the service offering, Airbnb has successfully made the payment process involved in booking a short-term rental seamless and nearly invisible for both parties. So the sharing economy and subsequent PropTech innovations have also had an impact on residential co-living arrangements. So these platforms appeal to more than the college or university community and are becoming increasingly popular among young professionals who are looking for a community. Organizations that provide the platform to facilitate these arrangements include the following: Collective, Open Door. And again, these have websites, you can go and actually see them. You have commercial rentals. So again, for the commercial rentals, you have a number of startups. And again, if you go through the web pages, the address of which are given on the slide, you can find additional details. And the similar applies for tenant management. Again, you have those companies that are looking into it. So in terms of buying property, similar revolution is happening. So again, you can actually look at those websites. So you have the 10X as an example that actually does this. So what is the future technology in construction? So first of all, you have digital construction management platforms, sizing of the development potential for real estate, 3D printing constructions, and energy efficiency. You also have issues with sustainability and energy, and again, if you go through those company websites, you can find more details. You also have the issue of safety and security, and again, you have startups that are actually looking into those things. So what are the future trends in the fintech and financial services? So just to summarize, artificial intelligence, security and privacy, big data, social payments, Bitcoin and blockchain, and automation. One of which is going to be quantum computing, where your calculations are done at a huge speed. Just to point out that quantum computing may have impact on blockchain because it may be actually able to crack the algorithm that protect the blockchain. You'll also have robo-advisory, and again, if you go through this slide, you can find more details. And finally, Web3. So since its first iteration of the web in the 90s, the connectedness that the web's functionality has made possible has continuously evolved. So in terms of the Web3, you have the semantic wave, 5G technology, and the IoT. You'll also have in the future mixed reality, augmented reality, and virtual reality. So again, how do you combine the two? This slide gives you a particular idea of what's going to happen. And in this slide, we're looking at some of the future emerging technologies. And again, you have a number of them. And again, you're more than welcome to actually look at them in depth. Thank you very much for listening.